that way. It's kind of mirrored.
The other way.
And this is our Wednesday afternoon home buying seminar. We get together every Wednesday afternoon to talk about all things home buying. We get together and talk about rates and markets, bring vendors in, talk to people about who are looking to buy their first home or to upgrade and buy their next home. And Patricia and I both real estate agents. I'm a broker associate practicing in Southern California. We're part of a national team, and so we'd love to help you no matter where you are, either directly or we can connect you with friends of ours. Patricia, what's the word of the week this week? What's your finger on the pulse of the market tell you today?
Well, I've seen.
Oh, by the way, for those watching, we don't script this or practice this. In case you're wondering,
Yeah,
this is rapport.
This is just freestyling here.
Yeah.
So I've seen, obviously listings are sitting on the market a little bit longer. But I feel like that is also a very, very good sign for buyers, because last 2 years, buyers just wanted a home. Anything that they could get themselves into, right? So they were compromising on different things, size, location. And now that we have, more inventory on the market, as a matter of fact, today in Downey, we have about 5 new listings. And so there's still new listings coming on the market every day. And what I've been, saying is you're going to marry the home and you're going to date the rate. So don't focus on the rate. Actually, rates are lower today. And you can always refinance when the rates come down. Today a 30-year fixed is at 5.18%.
That's a key statistic I want to talk about today. First, I want to say hi, shout out quickly to Mendel, who's watching us live on LinkedIn. Hey, Mendel,
Okay.
shout out. And Mendel is a lender, and he and I've kind of chatted a little bit. We should touch base. Call me anytime, Mendel. I'd love to catch up with you and come on as a live stream sometime and share what you do and how you can be of service to our customers. But if you look at the interest rate market, I think a month ago or 45 days ago, you might have thought that interest rates, if you listen to people, were going to go out of control. And they had gone up quite a bit. You can see the rise from the beginning of the year, below 3% to up to just over 6%.
Yeah.
And since then, they've worked their way back down. And as Patricia said, according to Mortgage News Daily, 5.18% is the rate today. And you can see it's coming down and correcting. Now, I don't know that it's going to free fall down or continue down. But what I can say is it's certainly not, and I think this is the key thing, it's not spinning out of control. It might have for a while, it might have felt like it, but as of today, it's certainly not. I was on the phone yesterday with a friend of mine. And he was so clear that the whole housing market was ready to fall apart, because the narrative of 45 days ago was rates went from 2 to 3 to 4 to 5 to 6. They go to 18.
Right.
They might. A lot of things might happen. China might bomb Taiwan, I guess. Russia might invade Poland or whatever. They haven't yet. Based on the cards we have today, rates have come back closer to where they were and certainly affordable. And as Patricia says, I think the market's certainly more healthy. In fact, it varies all over the country, but I wanted to walk through the numbers and just show you guys. Overall, it's true in some markets. There's always new listings come on the market, but actually right now we have low listings. The only year lower was during last year, during the pandemic. This is the year prior, which is when the pandemic was just starting. So pre-pandemic, the lowest inventory we'd had was about 800,000 plus homes. And today we have 400,000 and change, maybe almost 500,000. But almost half, or 60% of what we've had in historically low periods. And it might be going up more than it was the beginning of the year. And it might be slightly more than last year. And you read the statistics, inventory's up over last year. Yeah, that's kind of like sales in retail being up over last year being an unusual year. This is unusual in real estate in terms of being low. But I think that you'll see that the inventory is so low. And this is the thing I was saying to my friend, that as long as there's few houses to sell, there can't be a crash. A crash is when sellers panic and have to sell and cut their prices. And so a buyer looking today, I don't believe should be waiting for a crash. I just don't see it based on the cards we have today. It may change if things change tomorrow. If you can predict the future, fine. But I would say based on the cards we have today, it seems that we're not spinning out of control. We may have jumped up significantly, maybe not good, but certainly we're not spinning out of control. And I think that's the key thing is if you can afford to buy a house and it works for you, great time to buy a house. If you need to sell a house to move, relocate, great time to sell. But we have to look at the data and make informed decisions rather than be emotional.
Right.
So you see, sorry, go ahead.
No, I was just going to say that, in today's market and the shift that we've all experienced recently, as I was saying earlier, buyers have more choices. So now if you see yourself in a home, really envision it. And the day that you decide that you want to buy a home, that's the day that you need to start getting prepared. And that's what this workshop is about, just getting prepared. And so now you can really take your time and look at a home that just hit the market and not run out and make an offer on it and pay $50,000 over asking. So it's easier in today's market to stick to your budget because the prices are holding steady. In some areas, I've seen a few price reductions, or sellers are helping buyers with concessions, meaning that they're offering to pay down your rate for you. So that will in turn save you money in the long run because you can possibly get a lower rate with the seller's help through concessions. So that's just something that I've seen in today's market where we didn't see that the last year or 2 years ago.
Yeah, I think, and again, I think you're right on. You have to be careful. I think some of his buyers assume, well, because of that, I can ask for everything. We had a buyer on a listing of mine who last week asked for a seller concession equal to 15% of the sales price.
Oh, is that all?
And he gave a list of all things we want to do with the property. I said, well, that's not a seller concession. Right. That's a value add investment into a property. Right. And I think the thing, as I explained to the agent, is there anything here that your buyer didn't know when he walked in the door? I mean, we knew what year the property was built. It was built in the 1910s or 20s. And, all of that means and the condition of the property. And I said, I understand your buyer would like to have, a remodeled property. That's not what we're selling. Right. So I think sometimes, and basically my seller just said no. And we're negotiating to some degree, some concessions. We're not quite done there. I don't know if we'll get to, but we're not going to get to anywhere near his number was. Mm-hmm. But I think buyers have to understand that sellers still don't have to sell for the most part. And my seller in this case is saying, well, for that price, we'll just develop the property ourselves or put it back in the market. And that's really what we're faced with. On one hand, buyers can get good concessions, but it's certainly not a crash. And I don't see those numbers coming up anytime soon in my book. Right.
Yeah, and the other thing to consider is, in the last 2 years, sellers were mostly looking at conventional financing for buyers. Mm-hmm. And so other loans were kind of not even on the spectrum at all. So, that's what I mean by buyers having more options too, because they're able to look at FHA loans and make an offer with FHA financing and having that loan approval that says you're getting an FHA loan. So that helps you by putting 3.5% down. Typically, FHA loans will have a lower percentage for you. So as a buyer, you are getting that advantage of a lower rate already.
Our colleague, Jill Spatty, says, are you seeing the buy down rate coming back into fashion? And I remember I started my career as a lender, and I started when rates were over 10%. And it was very common. One of the basic tools I had as a lender was the cost of a buy down, a 3-2-1 annual buy down, a 3-2-1 6-month buy down, a 2-1-0 buy down. And we would regularly put together packages, and then for open houses, we would prepare market materials that included the buy downs to get the buyer in, and we could qualify them at the rate for short-term buy downs, or sellers could pay points to buy down the rate longer term. Builders commonly did that, where they would pay maybe 3-5%, but they would package together the points to lower the interest rate, and then we'd mark what the payment was for that property. You can move this property with this much monthly mortgage payment, and then taxes, insurance, and whatever else. And so her question is, you're saying, so I haven't seen that. I think it's because the lenders that we have in our market today are still very much fat and sassy from the last 10 straight years of doing refinances and haven't had to learn how to sharpen their pencils and had the competition to force them to do that. What do you see, Patricia? Have you seen any lender approach you with buy down options and market material based on that to help you sell properties? I haven't seen that anywhere.
I have not, Bill. No, I have not. I have had a ton of lenders approach me though, just trying to get business.
Mm-hmm.
Right now, it's a difficult time right now for a lot of lenders because of the slowdown with the refinances. A lot of lenders were really capitalizing on that low interest rate, and the bulk of their business was from refis. But
it is amazing, isn't it? I get emails every day. I get texts every day. I get texts from some superstar mortgage guy's assistant. Do I want to talk to the mortgage lender? Like, yeah, but he's too busy to call me. I have to set an appointment to talk to him. It's kind of weird, but I think that, and we've offered on this call, we've had lenders come in, and what's interesting, and I'd love to have them come back. But what's interesting is they just don't seem to want to put the time in to build the business. And and I'm going to say, because I've been in this business long enough, and I've coached, I own part of a mortgage coaching company. We coach mortgage originators at some of the top companies. You got to put work in every day on marketing your business. You can't just sit and answer the phones and write loans anymore. You're not going to be able to, I don't think, for a long time. And so, we're always looking for partners who both want to, market to our customers, but also do the hard work of getting them qualified, showing them different programs, creating alternatives.
Right.
So.
Yeah, and it goes, the same way with us as realtors, building up our business, marketing every day, talking to as many people as we can. That same scenario applies to the home buying process because you want to make sure that you're really nurturing your credit, or you're not making any, large purchases or depositing over time, sums of cash, because that's going to have to be traceable. And they might question that later on in the future. So it's, once you've decided that you want to buy a home, it's something that you really have to nurture along the way. For example, I have one of our participants that was on the call earlier in the year. After talking with her, she's in the credit repair program that we offer. So that's another thing that I wanted to just, bring up today, because it really is helping people to get on track. And now as the market has shifted, as we've been talking about, it's a great time for them to be halfway through that program and possibly looking into purchasing a home at the end of the year, because their FICO is going to be where it should be. And so this is the time where you have to continue to nurture your credit, not make any large purchases, and really stick to the commitment of buying a home and what that involves, because it's not just a decision that you make one day. It's something that you really have to stay on top of and stay disciplined and stay committed to that process and nurturing your credit, not co-signing for anybody. And I just did a video on that the other day because I was talking to a lender about somebody co-signing for an apartment lease. And depending on the apartment complex, they could report that to the credit bureaus, which would essentially increase your debt to income ratio. And so those are things that people might not really think about, right away. It's not something that might even the thought might not enter your mind, but these are just things that are something that could be very sensitive to your credit. And so it's just being careful with your credit and really making those decisions, after you've really thought about it. Maybe talk to a realtor, myself or Bill, or talk to a lender if you're not sure if it's going to impact your credit or not.
Well, and I think at the broader level, you're talking about preparing, right? I mean, all those things fall into the category of you got to get prepared. And this is your opportunity. A year ago, to do all that, you'd lose the house you want, you'd feel frustrated. Here's a chance where you get started now. Other buyers are maybe reading the headlines and getting discouraged and missing the fact rates have come back down, 0.75% in the last few weeks. So it's a chance to jump in, take advantage of it. And then on the same topic, Jill, as a little further, we have to console our buyers. They're not going to get a deal, but we'll find a great, home for them. And then we make sure they don't overpay for it. So it's the same thing. We just have to do the extra work and help people. But I do think this is a great opportunity for people who are ready to buy a home and can afford to do that. Okay. Hey, we want this to be participative. I know we've had a couple people on our YouTube and our Facebook jump in If you're on the Zoom call, feel free to raise your hand, put a note in the chat box. I'd love to call on you and let you participate directly. And if you're on social media as well, feel free to put a note in the chat box, whether it's on Facebook or YouTube or LinkedIn. We're watching all those right now. And we had Mendel on LinkedIn. We had Jill on YouTube. So a little bit of everything. Somebody on Facebook out there, maybe jump in if you're watching us. Love to have you come in as well.
Yeah, I don't see any questions yet. But I would like to welcome Raina and Dina and Nick to the call today.
Nice.
Thank you.
Hey, Raina, what's up? Yeah, some low ones in the background, huh?
Yeah, sorry guys.
No, that's okay. I understand. My grandson would have been here, but my wife went over to his house to play a little bit of the nanny with him. So we usually have some noise in the background ourselves. Good. Well, welcome. And Nick, welcome to our call today. I don't think his audio's on. And Dina as well. You guys want to come in and say hi, tell us where you are and what you're working on or how we can help you?
Hello, thank you. I'm a daycare provider. I'm sorry, it's a little noisy as well.
That's okay.
That's okay, Dina. We love daycare providers because you're raising kids. I got a grandson, so I know how. My wife is a daycare provider for a grandson, so I understand how that works. Nice. Okay, good. Anybody have any questions you want to ask about buying a home? Anything we do to help you guys? I don't see any more questions in the chat box. I think we picked them all up. Any last words you want to say, Patricia, for anybody who's looking to buy a house? Any great deals in the Downey area? Open houses coming up? Anything you want to present? How about tomorrow night? If you're in the LA area, come to the LA Real Estate Investment Club, LAREIC, 6 o'clock. If you want to learn about investing in real estate, there'll be a great speaker, Joe Arias. Beforehand, there's a vendors expo. It's free parking if you get there early enough. The free event, and we'll be there. We have a vendor booth. I'm the live podcaster at the event, so come up and say hi if you come. Introduce yourself. But Denise, where can people see what's going on with you?
Yep, I'm going to try and meet you there, Bill. I just wanted to say as a final tip here on today's call, it is important to talk to more than one lender when you are ready to get that pre-approval going because they offer different, products and different pricing. So it's not just the interest rate you're looking at, you're also looking at maybe underwriting fees, loan processing fees, funding fees, things like that. And also in talking with a lender and a realtor, we can help you basically keep you away from buying more house than you can afford, and just kind of managing those expectations and making sure that, you're staying on track and getting something that's going to be really suitable and functional for you and your family.
So we did get a Facebook user who just said, hi, Patricia and Bill. Always a pleasure. Thank you so much for the latest updates. And then we got a question from Tim out of St. Clear. What's a typical down payment required today, or is there a typical one? How would you answer that?
Well, for FHA, it's 3.5% for down payment.
Mm-hmm.
Conventional, you can put down lower than 20%, but there will be mortgage insurance that's still applicable. Anything lower than 20% for conventional.
Nice. Yeah, I'd say even at, of course, VA, if you're a veteran, you qualify, no money down. And then there's closing costs, but if you plan things properly, you can get a seller to pay for some of the closing costs to lower your out-of-pocket up front. So it's all negotiable. So it depends on what you're looking to buy and where you're looking to buy and what your financial profile. Sometimes putting a little money down is good, but don't let that stop you. Or at a minimum, meet with Patricia or I and get with one of our lenders and get a game plan together. If you don't have the down payment, let's work on that together. Some different options we can look at. And I'm going to guess in the near future, we're going to have a few more rent to own option, or at least own options coming up as sellers try to sell and get their price. So I would say don't make a decision you don't qualify. Let's see where you are today and then see what your needs are and make a plan to get there, whether it be right away or we get you down the road.
Absolutely.
So thanks, Tim. Thanks for jumping in and saying hi. Let's see, where are we? So I think that's any final words. So tomorrow, see us if you're in the LA area at the LAREIC, which is the LA Area Real Estate Investors Association. I'll put that on the screen. There's the URL, LAREIC, Osage County Real Estate Investors Association. And then what it is, it's just south of 10 Freeway on Motor in kind of Culver City-ish, West LA area, just south of Cheviot Hills. And this is what it looks like. There'll be a speaker tomorrow. Joe Aris will be the speaker. And about 250 people will be there, so it's kind of fun to see other people. And there's a vendors expo starting at 6, and we'll have one of those tables, and I'll be there podcasting and recording people. But you'll have different lenders and different vendors to real estate inspectors and such. Nashel Kennedy will be there, Kismet Kennedy. And so it'll be a lot of fun, and it's free. Parking's free if you get there early enough. Otherwise, on the street, there's some meter parking. But if you're there, definitely come up and say hi to us. And any last words, Patricia, before you wrap up?
No, I think that's it. If anybody has any questions, please call me at any time. I always answer my phone, and I can be reached at 323-365-9909.
And my contact info is in the chat as well. I'm Bill Gross. I don't answer my phone all the time. If you need something right away, call Patricia. In fact, I'll probably forward you to her if you call me. Just 'cause I'm a little older and I got a grandson now, and we're trying to build a business here. I'm not as available, but glad to help you guys. Love to have you on the call. We do this every Wednesday, 5 p.m. Pacific, 8 p.m. Eastern time. We record it. We live stream it to YouTube and Facebook and LinkedIn. Obviously, we had people from each of those 3 today. And then we also put the recording up there as well. So thank you for participation, Jill and Tim and Facebook user. And Raina, thanks for being on today. And Dina, who am I leaving off here? And who else was there? Thank you. And Patricia, thank you so much. Say goodbye, Patricia.
Well, thank you.